Christian Tharp, T3 Live contributor and a CMT. Be sure to sign up now to get to trade alongside Christian for free this week. I went ahead and put that link in the chat. There's also the QR code there on the screen. So, Christian, let's just go ahead and get started here. The last time that I had you on was my first time doing this, and the very next guest was Scott, and I asked him a question that I've kind of turned into a series here. I asked him about his morning routine, and I thought I was going to get something like, oh yeah, we'll check the news, we check the charts, we check the different setups, and he launched into an entire thing about a cold plunge and running and all of that, and I know that everyone's morning prep is different. Our viewers here thought this was an extremely valuable thing. So I want to hear from you. What does your entire morning routine look like? How do you prepare for a market day?
It's probably not going to be the same. But I think it's a great question, because I think when you talk about trading, at least successfully, right? It's all about emotion. It's all about psychology. It's all about mindset, right? I think anybody that's been in the market any extended length of time can identify a candlestick pattern, right? I mean, I think we can all identify, new 52-week highs. So I think when it comes down to your success, everybody's going to be a little different. Mine, so I conduct a total, speaking of the trading this week, prime time, I'm on that call 1, 2, 3, 4, 7 different times in the week. Total throughout the week, I'm on the call 17 different webinars. So for me, it's like I'm constantly plugged into the market. And there isn't a whole lot of market prep for me. So before Monday ever comes, I already know what I was thinking from Friday. I already know, right? I always kind of look at it, explain it like you're driving down the road. You kind of know where you've been, and that helps you know where you're going, right? Because I know I just passed the CVS. I know I just passed that McDonald's. That's where I get coffee. I know right in front of me is such and such. I know I can turn right up here. I know I can turn left. And it's kind of like how you would look at the market for me. So for me in the morning, it's really, I take about, I guess, an hour or so. I have a wonderful little 8-year-old, a little 12-year-old, my 2 little girls. And right before the market opens, before I get to work, which is generally right around the 8:30, 9 o'clock slot, I completely disconnect, and I help one of them fill their water bottle. I help the other one get her backpack filled. I walk one to the elementary, and it's a part of my routine where for that moment in time, it's almost like that fresh eyes, that reboot type thing. And you come back to it ready to kind of go a little bit where, again, for that little bit, for me, having being market all the time, all week, that's that kind of reboot, that reset, and that start over for me. So and I hold to it. So I completely away from the market. And then once it's go time, it's go time.
Okay, that's awesome. And you know what? I'm glad to hear that, because that actually seems very similar to me. Like, go time is go time, right? Go time might be 4:45 or 5 o'clock in the morning, but go time is go time. So, all right, really awesome answer there. And I know a family must throw a huge kink in that, trying to get everyone ready for the beginning of the day there. Okay, really good stuff there. The second question I have here is more about an edge, right? So first of all, I'd like you to explain what your edge is when it comes to picking new trades and then actually executing those trades. What is your edge? And then if you can go into a little bit of depth about how you actually exploit that edge.
You bet. Okay, I'll try to do this in the short and skinny. So for speaking of prime time, that is where we employ the strategy that you're asking about and what that edge happens to be. The best way I always kind of describe it is I describe my approach to the market and what I might do differently in the form of a chess match. All right. I refer to it as there are several pieces on the board, and obviously us winning the week, that's our opponent. The market is our opponent, so to speak. And when we came in on Tuesday, so anybody that wants to come in and trade for free this week, we're going to come in Tuesday. The market will have made its move. Our stocks would have made their move, right? So those pieces have been, now it's our turn. So I make a move. Then we come in tomorrow morning, market makes a move, right? And so we're going to adjust as we go. What we're trying to accomplish, what I try to use to our advantage is, one, a shortened week so that options premium are lower. Because they're lower, we stick with volatile stocks that if my view was, for example, last week when Tesla took out 360, our view was Tesla was going to make a run at 400, okay? So based on what we saw on the chart, what we want to do is we want to use that high volatility combined with shortened week, lower premiums, because we're not going out 2, 3, 4 weeks, and it creates it's a greater risk reward. So for example, if I tried to put on, buy those 400 calls last week on Tesla on Wednesday or Thursday, it might only cost me $1 or $2. But if we get there, thanks to that volatility, right, then we might be able to turn that into a 4, 5, 600% type gain. Versus if I try to do that for next week or the following week. So we use this shortened time frame that gives us lower premiums for stocks that are going to make that move in. So Tesla doesn't need a month to make that move, right? It just hit it yesterday.
Mm-hmm.
The Broadcoms that we trade, the NVIDIAs that we trade, all these stocks that we really get into, we use that, and then we play this chess match of somewhat catching the market. So if I buy calls on Tesla, and we bought puts too, is for example, to give you an example of what I mean. Last week we strangled this. So when Tesla dropped, well, that was the market's move. We brought our calls down. So now we made it harder for you to take money from us if you try to rally against those puts. If you want to keep dropping, that's fine. We got these puts here, and that's how we'll win. You go back up, we'll sandwich you with those puts, and we're going to make it harder and harder. And we use the stock and the market's volatility with low premiums. We combine that in a way to kind of give us an edge where we increase the odds of us winning, not necessarily because we're right or wrong on direction, right? But because we're playing this match with the market, it's like a tit for tat. So we're not. So decision I make on Tuesday, we're flexible, and I can pivot Wednesday morning. I can work that and change it Thursday afternoon. So we try to win at the end of the week.
Okay.
So, short as I can do it.
No. That's really great. And I mean, like, I'm trying to compare that to something like sports. It almost seems like you're playing defense, right? It almost seems like you're playing defense most of the time. You're kind of waiting for the market to make its move. You're going to be positioned accordingly. And then when that move comes, that's either when you increase your bet or you stick with the winner, like you were just talking about, strangling it there. You're kind of just waiting for the market to tell you what it's going to do, and you're trying to be as prepared as possible to take advantage of that. That's what it sounds like. Okay.
Exactly. Sometimes we just like long, and we're going to buy some calls on X. Other times we might buy 3 calls, but we're going to protect ourselves with a put because, hey, FOMC's tomorrow or GDP or something like that. And then if everything goes our way, cool, we take our profits. But otherwise, yes, we're sitting there ready to play defense, as you put, as a perfect analogy. Or again, maybe we're playing our opponent in chess and whoops, they just took our rook. So never mind, we're going to move over here. We're going to be adaptable. And we're going to think several moves ahead. What do we have to do to win the week? And I can't stress enough, the low option premium combined with the volatile stocks is what helps us pull this off, right? Okay. So because we're taking bigger shots of 3, 4, we don't ever put a trade on that we don't think there's a 300 to 500% potential gain, right? So because we do that, that's what allowed, we couldn't pull this off if we were going out 3 months. But yeah, I think that's a perfect analogy.
Okay. Really awesome. And my next question here, I'm actually going to change it around a little bit based on what you were just saying there. My next question here was, what are the biggest hurdles for newer traders? But given what you just said there about how you're preparing and how you're getting yourself set up, what are some of the biggest hurdles that you look for to make sure that, hey, I am actually executing this correctly, or I have an understanding of what's going on? What are some of the hurdles that you try to avoid or get over?
Sure. I'd say that whenever I conduct a webinar, because I have a mentoring program as well, whenever I conduct that webinar, I always try to explain to everybody the same thing I do in prime time and anywhere else is that, I don't mean it to sound as negative as it sounds, but as a retail trading public, we're somewhat duped into what it takes to make money in the market. Mm-hmm. Okay. So what we are led to believe that it's about software programs, trading platforms, indicators, and I encourage all my students to take a step back for a second and just remember that no indicator other than price made anybody any money ever. Okay. The indicators are not what's doing it. I don't care if it's your VWAP, your moving average, all that kind of stuff. And we are duped into thinking that. So we spend all this time trying to get this right little 3 or 5 or 7 indicator combo, or really deep diving into the Bollinger Bands or the Fibonacci. Meanwhile, we're not doing things that actually matter. Risk management. Do you have a good risk reward setup? And even if you did, are you letting the reward happen? Are you cutting the risk where you said? These are the position size. Nobody ever blew up a trading account because they used the 8-day instead of the 20-day moving average, right? You blow up your trading account.
That's right.
So these are the things that matter. So for newer traders, or I've coached students that are 3 decades in, and it's somewhat of an aha moment when they realize, I said, look, just to be clear, that fill in the blank, right? That your candlesticks price is what worked for you. So don't ever forget, but before these trading platforms, before investors and traders were doing just fine with price only, and they didn't need a trading platform to do it, right? Even to this day, people are using point and figure, Renko charts, and good old fashioned price. So get back to the basics. I call it the indicator fallacy. Don't fall prey to this fallacy that somehow I've used these 17 indicators and they don't work. I just need somebody to tell me that 18th one that's going to work, right? So that's and I don't want to make it sound like that people that talk about the indicator package that they might use are lying. It's just notice how there are a million different ways from Sunday to trade the market. So in other words, it can't possibly be because of the 10-day moving average, because that guy's doing it with VWAP and that guy's doing it with bands and that guy's doing it LA wave. So what is their common denominator? Risk management, good risk reward setups, discipline, emotion. Don't blow up your trading account. Wash, rinse, repeat.
Yeah, I think that's awesome. I am always preaching risk management ahead of everything. And I've also said a number of times, such and such is the most important indicator other than price, because I like the way that you put it. You get paid on price. You don't get paid on any other indicator, not even volume. You get paid on price. So really, really good stuff there. Okay. Do you have any specific stocks that are kind of got you looking at them here today? Anything exciting? Any setups that you're looking at for today, Tuesday, December 12th, or excuse me, December 10th?
Absolutely. We've had our eyes again. And this is what's great about once you kind of get tuned into the market. So last Thursday and Friday, we knew what we were watching this week. When Tesla took out 360, okay, that thing took off. Now we're saying, please come back to 360. That's where we'd expect to find support, that old little resistance, love to get in. Apple may have left the station, but when Apple took out 237 last week, keep going. So that may not come up. But look at Meta. Meta finally took out 600. That little pullback yesterday, right? That's kind of a good thing. So we can get these things to come back to these levels. So Tesla back near 360. If we get Meta back near 600 again, I don't think Apple's coming anytime soon because that really took off yesterday. But these are the ones we were watching. And then setup-wise, we were watching Broadcom. Broadcom looks like it could be the next one, right? Pretty clear resistance up top up there around 185.
Yep, absolutely.
Right? So what I've been telling my students, look, these guys have already broken out. I think we kind of missed the boat here for this week unless we can get a pullback. Sure enough, on Q, market started to pull back. But let's keep our eye on Broadcom because that could be the next guy to break out. And then as I mentioned, in prime time, a big thing for us is volatility. So a lot of times we don't even care about direction. We want movement. So something like a Lulu that moves, right, is great for us. I think flying around. Now, we will pick direction. Don't get me wrong, but we tend to hedge ourselves a lot because these volatile stocks just as easily. Look at Lulu on Friday versus now yesterday. Looks like it's going to the moon. Nice little reversal candle. And we jumped in and thought we're going to ride this wave higher. Notice how that hedge sure looks like it might come into play now after that one, right? So we love Lulu right now. MDB had earnings, I believe, yesterday. So that's a volatile name that we look at. We kind of come back to these wells. All right, look, what are the ones we can just play on their volatility? That we can play that chess match that I mentioned. You want to rally towards our calls? Great. Now we're going to bring our puts up as somewhat of a stop. You want to come back down? Haha, we got our puts. We'll bring our calls down and sandwich you and force you into that winner. So it's stocks like those that we really like, where we don't go as directional as much as we want your volatility and your movement.
Okay. That's really, really great stuff there, Christian. I really appreciate it. And again, I want to thank you so much for, first of all, being patient with us today, but then also giving us loads of great information. Folks, sign up now to trade alongside Christian for free this week. I'll go ahead and throw the link in the chat, but it's also that QR code. Also, big shout out to our producers for getting all of that stuff ready for us. Christian, appreciate you. The door is always open. Can't wait to speak to you next time. All right. Have a great rest of your Tuesday.
Thanks, man. Have a great week.